Okay, is it recording? It looks like it's recording. I'm also looking at my gold trade. It's looking good. I'm testing a robot. It's a free robot. You can find the link to download it in the description. Initially, I caught gold here on this candle. That was manual trading. Then I got stopped out somewhere here. Then I re-entered again, and I think I got stopped out around here. So now I decided, let me plug in the robot because I'm thinking gold is still bearish. There's a free signal there. I'm thinking gold is still bearish, that it's going to come somewhere here. So yeah, I'm hoping this robot can make me money up to here. My only problem is at the moment it has opened only 2 trades. I will have to look at the settings. Anyway, let's go back to the topic of this video. I decided to make this video because some of my friends have been asking me, they've been watching how I trade, and they've been asking me to share my tips and tricks on how to flip small accounts, how to flip a small trading accounts. Basically what I do is I deposit with my broker. My broker allows for a minimum deposit of $10. So what I do is I deposit $10 and I flip it to $100 or $200. I think the most that I flipped it to was around $300. Then I withdraw. I again deposit another $10, flip it up to $100, $200. I withdraw. I do it over and over again. I do have another account where I'm growing like a reasonably substantial amount, but I love flipping small accounts. This, besides the money, I think there's that excitement of a challenge with it. So instead of just talking with my friends, I decided there might be people out there who also want this knowledge. So let me just make a video and post it on YouTube. So how do I flip small accounts? First of all, you need a broker that allows for high leverage. Basically, high leverage. You need a broker with high leverage. 1:500 is fine. I know in the US, I think there is a limit. Is it 1:100 or something? I don't know. Maybe 1:200. I don't know the amount of leverage that a broker can offer. But yeah, it is what it is. So you have to work within those bounds. But you have to take that maximum leverage. With my current broker, I am not endorsing them. But I just have to mention them. It's XM. So they allow for 1:888. So when I deposit my $10, because of the high leverage, it means I can afford to do what I'm doing. It means I can afford to do this. But leverage is a double-edged sword. That's a disclaimer. Leverage is a double-edged sword. It can make you money, but it can also destroy you. So the first tip is get a broker with high leverage, because you are depositing $5, $10, $20. You need that leverage. Forget what people tell you that you need thousands of dollars in order to succeed in Forex. So if you are going to flip accounts, yeah, first tip, find a broker with high leverage and max it out. Second tip is work out your risk management, your lot sizing. You can see here my lots. Well, this is the ear, the Forex robot. It's 0.01, which is cool. But if you see my previous trades, they are all 0.01. These are manual trades. Why is it important? And why is it important that you keep being consistent with your lot size? Is because you are not going to win all of them. If you find a forex trader who tells you that they are winning all the time, they are lying. Look at my losses here. I lost on USD, but you will notice that my losses are easily smaller than my wins, but I'm still using what? The same lot size. So in order to flip your small account, decide on a lot size. I would recommend you use small lot sizes and gradually increase your lot sizing. Don't jump from 0.01 for my case, and after making a profit one day you jump onto one standard lot. That's the easiest way of blowing your account. If you're trading with 0.2, don't jump to 0.5, 0.9 the next day because the previous day you made some profit. That's the easiest way to blow your account. I have seen people do that all the time. Today they are trading one micro lot because they made money today and they are confident and they are hyped up. The next day, 2 standard lots, boom, and you know what happens? Account blown, and make it 0.10. So first tip, get a broker with high leverage. Second tip, your lot sizing, be consistent and manage your risk. Especially that you are using high leverage. It's important that you manage your lot sizing. Then tip number three is choose your trades. Don't just enter willy-nilly. Of course, you might want to increase the number of trades that you are taking if you are scalping, but if you're like me, I prefer to take only trades with the promise of at least a 3-to-1 risk reward. So I initially rode gold from here to somewhere around here. My stop loss was probably a few pips here, and I got stopped out somewhere here. Then I entered again around here. My stop loss was somewhere around here, and I got stopped out somewhere here. You get what I mean? So what you need to do is don't just enter trades willy-nilly. You now need to be choosy with your trades, at least 3 to 1. 3 to 1. You can still scalp, but that's dangerous. You can still scalp, but it's still dangerous. I prefer not to overtrade. Overtrading is what destroys many traders. So look for trades with at least a 3 to 1 risk ratio. That's how you flip your accounts. Then I think this is an important one. Tip number 4, we talked about brokers, we talked about lot size, we talked about choosing only trades with a 3 to 1 risk ratio. I think this is an important one. Tip number 4 is to stick with your plan. Many traders have destroyed their accounts because they choose to try something new. Every day they are trying something new. Every day they are chasing a new indicator, they are chasing a new robot, they are chasing a new strategy, they are chasing a new something. They are not consistent, they are not disciplined. That's how people get accounts blown. Master a strategy. Understand how that strategy works, how to use it. Because that strategy did not work today, it doesn't mean tomorrow you throw it out the window. Guys, every trader has losing days, has losing week. It doesn't mean you suddenly throw out a strategy out the window because you made a loss today. So stick to your plan. If you are trading trend lines, make sure you understand trend lines and stick to them. If you are trading support resistance, if you are trading chart patterns, be consistent. Because you lost a trade whilst doing your support and resistance, it doesn't mean that it's wrong. It happens. It's the market. It happens. So stick with your plan. So first tip, find a broker with high leverage. Second tip, your lot sizing. Determine your lot sizing and be consistent with it. Third tip, find potential winning trades, at least 3 to 1 risk reward ratio. Number 4, stick with your plan. You are going to have some days where you are not going to win. Still stick with your plan. Number 5, I would say this has to do with your confidence and your emotions. What I'll do is, after I've flipped my account, I will withdraw. I make a weekly withdrawal. I go out, I buy something that I want. You need that. Of course, when you're trading, your emotions are out the door, but you still, when you win, you still need that feeling that reinforces what you're doing.